Alright, so price action this week for the British pound against the New Zealand dollar was actually a really good example for the Forex model, the video that I put out last week. So I'm just going to go over that here. Notice once again that I start with the weekly time frame, right? I'm just trying to get a feel for if it's bullish, if it's bearish, right? So going into this week, so I'm on replay mode, just full disclosure. Going into this week, 15th of April, obviously I was bullish because you look here. So we're gonna start from all the way back here from a year ago. We've had a bullish market structure. We've been pushing higher. What happened though was after we pushed higher, we left behind this fair value gap over here. Right. This was also at a discount of this second half of the second dealing range. So price comes back, it retraces, it then sweeps this low right here, right? So we had close, we swept it, and we immediately got back up above it, right? So that right there is a sign of strength. Now, not only did we get back up above it, we also broke the structure right here, right? So this was the last swing high. Before breaking this low, we pushed up, and then we actually retested this. You see this last green candle? That's your breaker, right? We come back, we hold it as support, and so that's your key. Okay, bullish PD arrays are actually being respected, so we're gonna look for higher prices, right? And so now we come down here, and then we break this swing high again. Now we actually have a local bullish market structure. Okay, so we've got our weekly time frame. We've identified the trend. Now I'm just gonna mark out a couple of levels. After this week right here, the 18th of March, we actually left behind this weekly fair value gap. You see the top of the wick at the top of this candle right here, and the wick at the bottom of this candle right here. You see that gap? That's going to be the fair value gap. This past week, on the week of the April 8th, of the 8th of April, we wicked down below it. Actually, we tapped these levels right here. But you see how that fair value gap is holding. Right, so I know that, so this is the level I want to see hold before we make our next leg higher, right? And the easy target to look for is actually just this level right here, the last swing high that we made on the weekly time frame. Obviously, a more aggressive target would be all the way up here, but that's going to take a while to get to. All right, so we've got this weekly fair value gap holds as support. So we've identified that weekly time frame and what's going on. Now let's actually go to the daily time frame, right? You notice this is actually also going to be bullish. So we've got a bullish structure from all the way down here. You've got a high, higher, low, higher, high, higher, low, higher, high, higher, low. We come back, we retest this weekly fair value gap. And in fact, we actually made it as low as this daily fair value over here. You see that? The bottom of this candle, and then the top of this candle, the gap. We wicked into it, and we got a really nice reaction. So, obviously now the thought process has to be, okay, we've come back into the discount of this dealing range. I'm looking for an entry over here so that we can now push up into these highs. Right? It doesn't matter if locally, okay, it kind of looks like it's pushing lower. We just came from the weekly time frame. We know that the context is that it wants to go higher, right? Now we come here to retest a daily fair value gap, and we're holding within the weekly fair value gap. Chances are we're going to push higher. So we've identified our daily time frame. We're bullish. So the bias now is that we're going to look for longs. Now I'm going to go to the 4-hour time frame, and I'm going to mark out my PD arrays. Right? What do I mean by PD arrays? Order blocks or breakers, fair value gaps, all that kind of stuff. So this right here is going to be a 4-hour order block. Right? Notice how it's the last down close candle before we begin to push higher. So actually, let me just edit this. 4-hour time frame, mark PD arrays. Right? And obviously the goal is that at some point we're going to get a retest of a PD array that is in fact going to give us an entry. So this was how Friday ended. We know we're looking for this. Your first target could easily be this high right here, right, on the lower time frame. Then you've also got this high, and then finally you've got you got a few more highs here, right? Eventually, that was the high that we had marked out. That would have been a run of what? Let's see. It would have been a run up of, so this right here would have been 47 pips. This one would have been 80 pips, 85 pips, and all the way up here would have been, well, that's over 200 pips, right? It's a pretty insane move to think about. Yeah, so let's see how price played out. So if I just go to the next candle, now Sunday opens up retesting that order block. You would have gotten an entry if you were trading the Asia session, right? I'm usually not trading that session, so I actually did not get that entry. So what we're going to do is wait for entry, right, once it taps. But here's the key thing that I actually mentioned in the model video. I want it to be during a kill zone. Okay, so now what I'm going to do is I'm going to go to the hourly time frame. We tapped this OB. Now here it is. We're pushing lower, and this is what? This is midnight open. And now this right here is actually London, right? Now you see how we're starting to push higher. So the key here is and there you go, we actually took out the highs. But here's the thing, we haven't gotten an entry yet, right? So the entry would have been here now, because this now is actually your order block, your 1 hour order block. The 4 hour order block, we already tapped it at an unfortunate time, because this is all during Asia. I don't usually trade Asia, and then we already pushed above it, right? So I'm not expecting price to go tap that order block again. So let's see what happens. Boom, right there. Okay, so we still haven't come here, but at this point we got a bullish engulfing, right? So this is actually the formation of a new order block over here. So what you can do then is that once we engulf it, you can set your trade at the high, a limit order at the high of that order block with stop loss at the bottom, because you're expecting a bullish push higher, right? Also notice that this is now during New York. It's at 8 a.m. right? So New York is open, and then your target could be any one of these. So you could have had these highs right here, right? So these relatively, that could have been a target. That would have easily given you a what? That is a 3.3 RR. You could also target these highs, right? Would have given you even more. But yeah, that would have been the entry right there. Let's see how it plays out. So this, there you go. You would have been tagged, right? And if you just let it play out, let's see what happens. There you go, pushing higher, pushing higher. And there it is, right? We eventually, by Monday, take that out. Right, this was what? This was actually Tuesday Asia. Tuesday morning in Asia, but Monday night Eastern time. Yeah, so we took it out overnight, right? And then eventually, let's see, did we even? Yeah, there you go. We eventually took out the highs on Tuesday as well. So here's the bottom line, right? You're going to start with the weekly time frame. You're going to try and get a feel for where price wants to go. We saw the lows were swept. All right, so let me go to the weekly time frame once again. So all the way here, these lows were swept. Granted, this was a year ago, but on the weekly time frame, that kind of context matters, right? So we swept these lows into the weekly fair value gap. We reclaim it, and then the breaker right here holds and gives us a market structure shift. Now we've swept those highs, so we're trying to figure out where's the next higher low going to be formed. We have this fair value gap, so that's going to naturally be the first guess, right? Then, so you know you're looking for longs on the weekly time frame. So now you're going to go to the daily and kind of try and refine your levels, right? We see that this fair value gap was tapped. We pushed higher. We got a nice little reaction. So again, we're looking for long positions. That's the favor, right? That's what we're favoring. Then finally, now you just go into your lower time frame. You're going to look for PD arrays at a kill zone that's going to provide you with the entry, right? This was we originally had a 4-hour order block over here that got tested at a time that just wasn't favorable, right? And then we also had this hourly order block, but that never even got retested. We actually just got a breakaway gap. So you take it, you take what you get. And so right here we had another order block form. So what is that telling you locally now? We've already actually started forming higher highs and higher lows. We have a bullish market structure. We're probably ready for the push higher. So this would have been the entry, the stop loss, and then the target could have been any of the buy side liquidity that was marked from the left side of the curve, right? So these wicks, or even all the way up here, which we eventually swept. Okay, so this model actually works really well for majors, for minors. It all comes down to understanding where price wants to go, and then going to a lower time frame and finding key levels. Then you just wait until one of those key levels is tapped during a kill zone. That's what makes it high probability.